Okay, welcome back to the channel. Today is September 13th, and we are going to jump into trade review for the trades that I took in the New York session for today, September 13th. Okay, just to preface this video with a little bit of background information, I am still trading Apex accounts exclusively. Today I traded a group of four 50K accounts, so everything that you'll see on this trade review is essentially reflects what happened across all four accounts that were inside of this group. I did just recently take the max payout on all of these accounts. So it left the max drawdown at a little bit over $600 per account. And so because of that, I've had to reduce my normal risk size from what's typically $350 per trade per account to $100 or less per trade per account. So I'm taking very low risk trades here. And the goal is to build the accounts back up little by little, and slowly increase my risk until I can get back to my baseline risk level, which I'm not in a rush to do that. Whenever the time is right to do it, that's when I'll do it, right? We don't want to rush these things. And the purpose behind, the reason I personally do a trade review is because, as you're growing as a trader, hopefully you've got like some very fundamental rules that you follow, and you've created some sort of structure and rules to your trading. And for me personally, I believe it's very important to go back and revisit and look to see whether or not you're actually trading inside of these rules. And if you are trading inside of these rules, are you getting the results that you expect? Are you getting similar or the same results as, when you back test the market? Is the problem your strategy, or is it you if there is a problem, et cetera, et cetera? We're looking for holes, right? We're looking for weaknesses in our process and our strategy, and we want to plug those holes. We want to find those holes and plug them before the market does it by depleting our capital, right? And so that is the whole point of trade review, is to review, make sure you're doing what you're supposed to be doing, and to create corrections and improvements where it's needed. Okay, so the broker here is Tradovate, and I've essentially done a just a PDF download right from Tradovate to produce this document here. So we can see over here, I want to say, I think it was 3 trades that I took total. This trade here was a break even, which I don't know. I guess it got me out a little below where I had set my break even stop. So I ended up losing $4 in the trade. So Tradeovate's going to count that as a full blown loss. Okay. And then over here we can see total profit on the day. And then after everything was all said and done with fees, the accounts were up $162.60 per account. So that breaks down to a win rate of 60% today and a lose rate of 40%. Even though, again, this really should have been a break even, but we're not going to fixate on it. Let's just move on. This is just a further breakdown. P&L history, cumulative without fees, P&L history, cumulative with fees, et cetera, et cetera. This shows a gross loss breakdown, lost trades, trade fees, and commissions here. And then at the very bottom here, we can see the full breakdown, showing the symbol that was traded, the quantity of contracts that I entered these trades with, whenever I bought or sold, the time, just the complete breakdown, and then the profit or loss that resulted from these trades, okay? So those are the numbers, but most importantly, what I really want to explore here is why I got in these trades at all. Why did I take these trades? Why did I manage them the way that I did? Why did I choose the size that I did? Let's get deep. Okay. So personally, I like to focus on the 1 hour, and I like to focus on the 15-minute. Sometimes I'll look at the charts, and what I'm seeing with, market structure and price action looks like it's more congruent sometimes with the 15-minute, and sometimes it looks a little more, conducive to the 1 hour. And sometimes they kind of just line up beautifully and they look very congruent between the two. But I'm typically going from the 1 hour down to the 15, deciding, which time frame I really want to try to get in sync with the most. And if I don't see anything that looks like it makes sense to me, then I'll go above those time frames. But typically, I don't find it to be necessary. I'm really into trading internal structure, so I like to combine that with like whatever market structure is showing in the 1 hour and the 15. I like to combine that with what I'm seeing in the 1, 3, and the 5. That's just personally how I do it, and I take whatever the market structure is telling me from the higher time frames and kind of press I guess I use that to find my levels, my key levels, and then I'm dropping down to the lower time frames, and I use an indicator based strategy inside of those key levels to find oversold, overbought areas where I want to take entries. Okay, so hopefully that makes sense. So let me just kind of break this down so you understand what you're looking at when you're staring at my charts. Okay, there are 4 things that I am looking for specifically every single morning in New York pre-market. I'm looking for key levels that the market has either, broken structure in a short or a long. Okay, so I'm looking for key levels where we've seen bounces or rejections a multitude of times. I want to see at least 2 or 3 really significant rejections or bounces from that area. I want an order block in the area that I'm taking the trade in, right? That is obviously congruent with whatever my directional bias is. So if I'm bullish, I want a bullish order block. And I want a Fibonacci retracement level that is between 50% and 78%. That has been mapped out in the 1 hour or the 15-minute time frame. And then lastly, what did we go over so far? I said order block, fib retracement level. I said my key level. Oh, and then the number 4 thing is I want to see an area where we can run liquidity and then take a sharp reversal once those people get squeezed out of their positions, and I'm trying to take it right back in the opposite direction. Okay, so those are the 4 things that I'm looking for when I'm mapping out my charts in the morning. Okay, so now I'm going to point out to you where those are actually mapped out at. Okay, yeah, I know my charts, they look crazy. We'll zoom in so it makes it easier for you to see this. Right here, this green line, this represents an area where we have seen the market bounce a multitude of times, so strong bullish moves that, and at least one that is broken structure. Okay, this rectangle, or rather square that you see here with the green outline, it represents the Fibonacci retracement level from 50% to 78%. Okay, and the orange or yellowish looking long boxes that you see, those represent bullish order blocks. And then of course I have the opposite on my charts as well. So the red boxes represent bearish fib retracement levels. The purple longer zones that are marked out here represent bearish order blocks. The red lines represent the areas where we've seen a significant rejection from the market a multitude of times. And then we'll see liquidity levels mapped out. Okay, and I just do those. Did I already delete my liquidity levels for the day? What? Pause. I did not, but that was an example from another day, and that's why that's not showing my liquidity levels. Okay. Don't get confused, okay? Everything that I just explained, it's the same. I do the same thing every day. If we go back in time, you'll see the previous day for fib retracement levels, right? Mapped out, order blocks mapped out, etc., etc. Okay, so it's the same thing every single day. So when I scroll over, you're gonna see today's market but it's this, the explanation is exactly the same. And you can see right here, right, I have mapped out London's low. I do not have Asia's low mapped out on this because once it gets run, I don't care about it. So London had already run Asia's low, so I wasn't worried about that, so I did not mark that on my chart today. And then if we go up here, we'll see Asia's high for the day, and we see London's high. So those are my liquidity, my areas of liquidity that I'm most concerned about. Obviously, as the market is moving up and down, it's engineering other areas of liquidity, but these are the major areas that I'm really paying attention to. Okay, so now with all that being said, once I have everything mapped out, I then have my structure for the day. Okay, and so then from there, what I want to be looking at and trying to determine is, what is my directional bias? Am I going to be long or am I going to be short? And I always have reasons why I will trade against my directional bias, but I do like to pick a directional bias at the beginning of the day. So today, again, big fan of internal structure. There's all this stuff happening here, but ultimately really all that I see here is a range, right? How did I come to that conclusion? The market moves up, okay? The market moves up, market comes down. We've got this big spike right here. Market comes back up, moves back down, moves up. It doesn't run this high, moves lower, doesn't run this low, right? Moves up, breaks this high, comes down, runs this low, but doesn't run this low, right? And so we kind of, the market is moving sideways, and that looks very clear to me. I've marked with this white line right here, the 50% level of this range. Okay, and so when I see a very clear range, I will mark the 50% level, and I know that irregardless to everything, I really want to be bullish underneath the range, and I really want to be bearish, above that range. Okay, so that's what I'm looking at. So I've decided here we're in a range, but when I look at this area just before New York opens, this right here has me bullish, or I'm sorry, bearish. Correction, bearish. I am bearish. But I know that if we're bearish and we push down into this level right here, I have 4 very significant reasons to take this up for a turtle soup, and I'm more than happy to do that. But I am bearish at the start of market open. Okay, so now that I have that in my head, we're going to drop down to the 1 minute time frame. And let's go and let's find the open, 9:30. You can see the time down here at the bottom. All right, so Friday the 13th. We had September 11th, and now, all right. All right, so here we are on the 1 minute time frame, okay? And now you're gonna see, right, everything, just remember how everything is mapped out. The green boxes, those are fib retracement levels for bullish orders. The orange or yellow looking, zones here, those are bullish order blocks. And you remember the opposite, right? Purple would be a bearish order block. And the red rectangles here that are outlined would be the bearish Fibonacci retracement levels. The bold red bars here, the bold red lines here, bearish levels that I'm super interested in. The bold green bars, bullish areas that I'm super interested in. So we have one here. We have one here for the bullish side, okay? Okay, so as I explained earlier, right? Once I have everything mapped out from a higher time frame, either the 15-minute or the 1 hour, or I could be kind of pinging between both, right? Today it's the 15-minute. Very specifically, it's just the 15-minute. I'm very focused on the 15-minute today. Once I have that, I'm going to drop down to a lower time frame, and I'm going to look for oversold and overbought areas to take my entries in. So if I'm looking for a long, I'm going to be looking for an oversold area for me to take my position. Okay, and it needs to line up with all of the other 4 things that I previously mentioned: liquidity runs, an area where the market has rejected really hard or bounced from really hard a multitude of times, and we've seen a break of structure from that move, a fib retracement level, and an order block. Okay, so we want to see all of those things in play. That's going to give us the best probability. So with all that being said, you can see if we look down here, we look at the time, this is our 9:30 candle right here. Okay. So I took my first entry in this area. Why? Because all of the criteria was met. So even though my directional bias was bearish, if all four things line up, I will take that turtle soup almost every single time. Almost, I can't say that. I don't want to say that. That sounds too absolute. But in this case, I did not feel like I had a strong reason not to take the trade. So this is where I got into my first entry around this level right here. I broke even on the first attempt. And then if we, hold on, let's go back and pull this up. So let's see, the very first trade, so it's right here. Okay, so this was the, right here on this top line, right? So this is the break-even trade, all right, that I took. But the first one was break even, and then the second attempt from that same area was good. And I do like to move my stop fairly quickly. I'm a little bit conservative with that lately. So if we come out of this here, and real quick, just to make sure we're like hitting all of the key things, right? If I'm going to take a buy, I want to take a buy when my indicators are showing me, right? We got to be in the key level, in the key area of interest. But I want my indicators to be showing me that we're oversold, okay? And we definitely have that. We can see that we look exhausted on the MACD. We can see that the stochastic has pulled all the way down into the oversold region here. And we can see that our RSI looks oversold as well, right? So we already look good from this level here. But my rule is I want to take the deepest turtle soup that I have mapped out on my chart. And the other reason why this is the correct area and we don't want to take this level first is because our liquidity that hasn't been run is matched up with this level right here. So they're it's like a cheat code. It's like they're giving us the answers. Okay, so we're going to go ahead and map out a long in this area, and I'll throw my template on for a long 3-to-1 reward to risk. Okay, so this is basically what that looks like. And I did drag my stop, so I ended up getting stopped out in the green, and I ended up getting, somewhere around, it was closer to like a 2-to-1 as opposed to a 3-to-1. Okay, so that's the first trade, and all the criteria was met for me getting into that trade. Now, there are a lot of people that look at a million different things to get in trades. They've got like, book map and they whatever. I don't know. I do not look at all that stuff. I literally go from like the hour or the 15. I'm looking at market structure, map it out, lower time frame, looking for oversold, overbought areas and my area of interest mapped out from the higher time frame. Those are my entries. Okay? I like to keep it very simple. I don't really think that you need to do much more. Just my opinion. Okay. So took that trade, and then I saw this opportunity here. Okay, so I knew that I had this key area of interest and this key area of interest, right? You see the two red lines which map out my area of interest here, where we've seen the market take some sharp rejections a multitude of times, and we have liquidity here, and we've got our fib retracement level here, and I don't know if I want to say in the hourly, I had already had one that would have covered this area as well. So again, it's giving us the power of 4. I just randomly started saying that recently, but it makes sense. So we have the power of 4 here in this area. And again, I want to take the deepest pullback because we don't want to get into this one and then get stopped out because it wants to reach to this level. I want it to reach this level. If for some reason I miss this and it pulls down and then pulls back up to this area, then I'll take this entry. But initially, I want the best one. I want the premium spot where both London's high and Asia's high has been run, and I have an area of interest. I have a bearish order block, and I've got a bearish fib retracement level as well. So this is a beautiful area, in my opinion, to take a short from. And again, when I have the power of 4, I have to have a really strong reason not to take it. And I don't see any reason not to take this at this time. So I do take this trade. So this trade looks, generally speaking, something like this. So again, we're going to throw the template on for a reward to risk of 3-to-1. And we can see that the market, I was not in this trade very long. So the market ends up moving down. I dragged my stop. The market pulls back. A very, very minor pullback, but nonetheless, I get knocked out of the trade somewhere around a 1-to-1. And then that was the last trade that I took for the day. But again, did I get in the trade for the right reasons? Yes, we had like all 4 conditions met. Did I manage it well? I think I was a little too jumpy with the stop loss. But if we zone out of this and we go back to the 15-minute, you'll see that around this time, when the market shot up from the initial bullish turtle soup that I took, hold on, gotta get into today's. Okay, so when the market shot up, right, from this initial turtle soup that was taken down here, I had reason to be cautionary about it, because look at this candle. Like, look, I mean, it's like, wow. So, I feel like you'd be a little cray not to protect the trade a little bit after taking a short after seeing this, right? Again, all conditions were met to take the trade, but I did protect it heavily because, you know, we were showing a lot of upside momentum. And I knew that at the end of the day, even though I wasn't focused on the daily, I knew that on the daily chart, if we go over here and we look, we can see, as I have mapped out here, that the market pulled back into this area down here. And so we've got a bullish fib retracement level with a bullish order block right here. And we've got, you know, the market being oversold on 2 different occasions down here. And as you can see, the market doesn't even reach down here. So we found support at this level. So I've known for like this whole week, I'm expecting the market to move up and pull into this fair value gap right here, this imbalance. What it was going to do after that, I wasn't highly concerned, but I did know that like I was expecting to see this move and then see some sort of rejection, and probably with the continued move back up is kind of what I was thinking. So again, I kind of had that in mind for the short, and I think I had multiple reasons to really protect that trade heavily. But anyway, I got out of the trade with some profit, but did not get the intended 3-to-1 reward to risk, but it was still good. So all in all, with all that being said, I can say that I followed all of my rules today when I was trading. I think I was a little overzealous with the stop loss. But again, I did feel that I had good reason to be. And I was also, it was my second trade. So, you know, I'd already made a decent profit for my degree of risk that I was taking today in the trade. And so anything that was extra was really just going to be like extra. It didn't really need to, I didn't need to have like a banger. It was okay no matter what happened. Okay, so that's pretty much how today went. And so if I go here and document on this, because the data is important to keep track of. It's not good enough to just like review it. You need to record it, like keep track of it. Okay, so were the rules met for my first trade? Yes. The entry time frame, the 15-minute and the 1 minute. Max risk, it was like under 100. Okay. And intended risk reward, 3-to-1. Was target hit? Like it was, but not while I was in the trade. So we'll just say, because I got in the way of it. Stop, drag, hit, in profit. Intended position size, two MNQ contracts per account. Actual position size aligned. I like to keep track of that because if I'm not getting in trades with the right amount of contracts, it means my risk is off, and it means I'm kind of doing gambly kind of stuff, which I don't want to be doing. So I try to keep track of this. And it also means too, like, if I know I should be in the trade with a max of 2 M&Q contracts and I'm in with like 5, that's problematic. I'm being greedy. I need to figure out what's going on with that. Directional bias was short overall, but power of 4 met for bullish move, and yeah, we'll leave it at that. Time of day. I do like to know the time of day that I'm getting in trades, because you'll go back and you'll see that, like, you'll have times where you seem to take more losses and times where you take more wins. And if that data is really sticking out to you, it's something to pay attention to. 15, 1 minute. Okay, so that means I took this trade like right at the open. I usually try not to do that, but it was very clear. I'm not going to worry about the entries and the exits specifically. The profit and loss, it kind of doesn't really matter. I want to be more focused on like the fundamental stuff. Okay, so the entry criteria, we're just gonna power of 4. Yeah. Exit criteria. So intended exit based on 3 to 1 risk reward, stop, dragged, and hit in profit. Okay, so that's how we got out of the trade. Mistakes made. I do not think that there were any mistakes made in this trade. Again, a little overly ambitious with the stop loss, but I'm not going to consider that to be a mistake. Notes for improvement. I don't think I really have any for that one. I think that one was fine, right? And so trade number 2, also trading M&Q. And we're going to exclude the break even on this because it matches the same criteria as this one. So trade number 2, also trading M&Q. Rules met for entry. Yeah, entry time frame, same thing. Mapped out in the 15-minute, taken in the 1. Max risk. Same thing, less than 100. Intended risk. That's dollars. Intended risk reward. 3 to 1. Target hit. No. Same thing. Stop. Dragged and hit in green. Intended position size. 2 M&Q cons again. And that is aligned. That's what it was supposed to be. And I actually got in with the right amount. The directional bias here is bearish. Time of day. So the second trade was entered once we hit our secondary level here. So about 9:43. Obviously Eastern time. Profit loss, we don't really care. All right, so entry criteria. Once again, it was the power of 4. It's gorgeous. Exit criteria. Stop, dragged, hit in green, mistakes made. I'm gonna also say again, the stop thing, but I'm not gonna beat myself up for that. Like, sometimes I just think that it makes more sense to be overly protective than not. Notes for improvement. I think this was okay today. How could today have been better? I really think this is one of those days where I'm happy with my performance, and I don't really think I did anything inadequately. Okay, so that's pretty much trade review right there. So I'm happy with where the accounts are at. I normally, when I take payouts, I normally end up blowing the accounts afterwards. So I'm proud of myself thus far for being able to manage, such a low max drawdown for as long as I've been able to. It's been like a full week and I've not done anything super reckless. I've kept my risk appropriate where it needs to be. My big focus right now with trading is risk management, because I was all over the place last year. I mean, really for 3 years. And the end of last year, I started to really see the light. The first 6 months of this year, it's been ICT mentorship and I would say consistent improvement. And now that it's like, identifying winning trades is not really the most difficult thing anymore. Now it's more so the management of those trades and making sure that my risk reward is appropriate so that my wins are taking care of all of my losses plus some. So I'm very, very heavily focused on fundamentals, and like very specifically the reward to risk that I'm taking in every single trade, making sure it's consistent, making sure I'm lowering my max risk when I need to, not going back up to the baseline max risk until it's appropriate to do so. That's my big focus, because if I can pull off consistent, reward to risks of 3 to 1 every single week consistently, inevitably my losses will be taken care of, and I'll end most of my weeks profitable. So that's what I'm focused on. And I definitely need to start doing trade review more frequently. Becoming laxed on that is also not acceptable, which I have been. So I'm really happy with this week's trading. I'm happy with what happened today. I hit the space bar and it just jumped right to BTC. I really don't care what Bitcoin's doing at all. But anyway, so I'm happy with my performance. There's nothing I would change about what I did today. And I think that's really going to be it. So I look forward to next week. Next week, I'll be increasing my max risk a little bit on that particular group of accounts. And I want to merge it with other accounts and then, get back to trading with my normal max risk. Okay, so that's it. And I hope this video is helpful for someone. And newer traders, I'd like to try to leave with you with some type of advice of some sort. Honestly, like focus on your risk management. There's a lot of things that go into risk management, but like more specifically, if you have a consistent reward to risk, right, and it's at least 2 to 1, it's really going to take care of a lot of other things moving forward. Like if you can stick to that, it's going to make your life a lot easier. So if there's anything that I would leave you with, if you do not have a consistent reward to risk that you trade with, and your position size is all over the place, it changes all the time, the amount that you lose in your trades is up, down, left, right, what you win in your trades is up, down, left, right, I would really tighten that up. Get it into a well-defined box for yourself and trade within that structure. So at least you know that when you win, it's actually going to take care of your losses, and you don't have to be afraid to take a loss, or you don't have to go on tilt when you do experience a loss. So I hope this has been helpful to some degree. I hope you guys have found some value in this, and I'll see you guys next week for the Nasdaq futures New York Open. Okay.